Sometimes it feels like we're just swimming in information, right? All these reports, news flashes. It's supposed to keep us informed, but honestly, it often just feels like noise.
Hmm. Information overload. It's a real thing.
Exactly. So that's why we do this. Today, we're cutting through all that to really focus on one company, Blackberry. They've been through quite a
A
transformation.
massive one.
Yeah, and we're going to dive deep into their latest numbers, the Q1 results for fiscal year 2026, and what their strategy looks like now.
Right. Our plan is to get past just the headlines from that earnings release and the investor supplement they put out. We want to figure out what those numbers really mean.
What's the actual story?
Yeah, what's the health of the company look like? Where are they headed?
Yeah.
Especially, in this world of intelligent software and services where they're trying to carve out their niche.
Okay, so we're going to unpack it all together. The goal is that you, listening, walk away feeling like you genuinely understand what's going on with BlackBerry, a company that's really reinvented itself.
It's a fascinating story.
Let's jump in. So, the big picture first. The headline news from BlackBerry for Q1, ending May 31st, 2025. They said they exceeded the top end of guidance range for revenue, adjusted EBITDA, adjusted EPS, and operating cash flow.
Across the board, basically.
Yeah, for the total company. That sounds like a solid start. But what's the really big news buried in there?
Well, I think the most significant thing, honestly, is that they hit GAAP profitability
Yeah.
for the first time since Q4 of fiscal 22. So it's been a while.
Right.
They reported GAAP net income of $1.9 million. Now, on a non-GAAP basis, it's higher, $12.3 million. But getting back into the black on GAAP, that's a milestone.
What does that gap figure really signal compared to non-GAAP? Why is that specific one important?
Well, GAAP generally accepted accounting principles. It's a standard, stricter way of accounting. Non-GAAP often adjusts for things like stock-based compensation or acquisition costs to show underlying performance. But GAAP profit means, even by the rule book, they made money. After years of losses, it suggests the turnaround isn't just, creative accounting, it's fundamental.
Okay, so it points to real operational health.
Exactly. It hints that the strategy, the focus, maybe the new leadership, it's actually working. It's not just about cutting costs anymore.
And the CEO, John Gimatteo, seemed to underline that. He said, BlackBerry made a strong start, building on the solid foundation we as a company have laid over the past year. And he sounded pretty confident about continuing profitability and cash generation.
Yeah, that confidence seems earned this quarter.
So for you listening, seeing them hit targets and turn profitable, it's kind of a big deal, right? It shows they're executing the plan. There's maybe some stability now after all that change.
Definitely stability.
Yeah.
And it validates the path they've chosen.
What is that path, fundamentally? What's driving this turnaround?
Well, like the CEO hinted, it really comes down to that focus. They're zeroed in on their two main business units, QNX and Secure Communications.
Right.
They explicitly said both are, quote, continuing to execute effectively against their strategies. That discipline, moving away from maybe distracting less profitable areas, that's what's paying off on the bottom line.
Okay, so let's break those down then. Let's start with QNX. That's their embedded software, right? The stuff inside cars and machines.
Exactly. QNX is the operating system, the foundation for a lot of embedded systems. Think automotive, medical devices, industrial controls, and had a really strong quarter.
How strong?
Revenue beat their own guidance, came in at $57.5 million. That's up 8% compared to last year.
Okay.
And maybe even more importantly, the profitability is impressive. Gross margin of 81%.
Wow, 81%.
Yeah, that's very healthy for software.
Mm-hmm.
And adjusted EBITDA was $12.7 million. Again, that adjusted figure gives you a cleaner look at the core operations profitability. It's a strong performance.
Now, here's a number that jumped out at me for QNX, the royalty backlog. They're saying it's $865 million.
Mm-hmm.
That sounds massive. For anyone listening who isn't familiar, what exactly is this backlog, and why is that $865 million figure so significant?
Right, that backlog number is crucial. It's not just potential sales. It represents future revenue that's essentially locked in from design wins, primarily in the automotive sector.
So contracts they've already won.
Exactly. When a car maker decides to use QNX in a new model line, that generates royalties for years as those cars are produced. That $865 million represents roughly almost 1.5 years of QNX's current revenue run rate.
Wow.
That gives them incredible visibility and stability, which is pretty rare in tech. It shows how deeply integrated they are. Once QNX is designed into a car's platform, it's very hard to rip out.
That's Sticky.
Very sticky. And this backlog grows because they keep winning new business. Like this quarter, they launched QNX Hypervisor 8.0.
Okay, what does that do?
It's built on their new architecture, SDP 8.0. Basically, it lets car makers run multiple different operating systems, maybe one for infotainment, one for safety-critical functions, one for driver assist securely on a single powerful chip, and so
Ah, so it simplifies things for the car manufacturers.
simplifies and enables more complex features. We also saw WeRide, an autonomous driving company, launch their next-gen ADAS platform.
ADAS being Advanced Driver Assistance Systems.
Correct. For L2 plus autonomy, think advanced highway driving assistance, but you still need to pay attention. That platform is built on QNX OS for safety.
Okay.
And another big one, Leap Motor, the Chinese EV maker, picked QNX for the digital cockpit and the autonomous driving systems in their new B10 electric SUV.
So multiple wins feeding that backlog.
Exactly. It shows QNX is right in the thick of where the auto industry is heading.
It really is amazing. You might not see the Blackberry logo on your dashboard, but QNX is under the hood running critical stuff in more and more vehicles. Quite the pivot from, the phone days.
Completely different world. They went from consumer hardware to mission-critical B2B software.
Okay, let's shift to the other pillar then, secure communications. Its revenue also beat guidance, right? $59.5 million.
Yep, solid number there too. And what's interesting is the improvement in profitability. The adjusted gross margin jumped 6 points from the previous quarter up to 70%.
70% margin, also very healthy.
Very healthy. Now, for secure comms, since a lot of it is subscription-based, we look at metrics like ARR, annual recurring revenue.
Right.
That stayed stable at $209 million. And the other key one is DBNRR, dollar-based net retention rate. That came in at 92%.
Okay, 92% DBNRR. What does that tell us? Is that good, bad, average?
Well, DBNRR measures how much revenue you keep and grow from your existing customers year over year. 100% means you kept them all spending the same. Over 100% means they're spending more. 92% means there's a slight contraction.
So existing customers, on average, spent slightly less than the year before.
Correct. It suggests that while they're holding on to most customers, they're not yet seeing significant expansion, like upselling or cross-selling, within that base. Or maybe some smaller accounts churned. It means growth likely needs to come more from new customer wins right now.
So is that 92% a red flag or just something to watch, given the revenue beat and margin improvement?
I'd say something to watch, not necessarily a red flag yet. The overall revenue and margin growth are positive. It might just indicate where their focus is landing new, perhaps larger deals, rather than solely focusing on expanding every single existing account right now.
And they did land some big ones, didn't they? Like the DCLI deal?
Yeah, the Direct Chassis Link Inc., Deployment Blackberry Radar, their asset tracking solution across 100,000 trucking chassis. That's a massive logistics win. Shows the scale they can operate at.
Huge scale. And what about ad hoc?
Blackberry Ad Hoc. That's their critical event management platform. They became the first CEM provider to get FedRAMP High authorization.
FedRAMP High. That sounds important. What is it?
It's a huge deal, especially for selling to the U.S. government. FedRAMP is the Federal Risk and Authorization Management Program. High is the top level, meaning their cloud service is certified secure enough to handle highly sensitive government data.
Wow. So that's like a gold standard for security.
Pretty much. It opens up significant opportunities with federal agencies and signals a really strong security posture to enterprise customers, too. And they also mentioned the Malaysia Cybersecurity Center of Excellence hitting its first anniversary, expanding partnerships there, too.
So these wins really show secure communications is playing in critical areas, logistics, government security, emergency management. It's about resilience for big organizations.
Absolutely. Operational resilience is the name of the game there.
Okay, let's zoom out again to the overall company finances. What about how they're managing their cash and capital?
Well, one thing they did was return capital to shareholders. They spent $10 million buying back about 2.6 million of their own shares.
A share buyback.
Yeah, and they announced a new buyback program, too. When a company does that, what does it typically signal?
Usually it means management thinks the stock is undervalued, right?
Hmm.
Or they feel they have enough cash for operations and investments, so returning the excess to shareholders is a good use of capital.
Exactly. It's often seen as a sign of confidence from the management team in the company's prospects and financial stability.
Okay. And what about their actual cash balance?
Their total cash and investments decreased a bit by about $28.4 million, down to $381.9 million at the end of the quarter.
Is that decrease worrying?
Not necessarily on its own. They noted operating cash usage was $18 million, but they also called Q1 a seasonally low quarter for cash flow. Plus, they spent $10 million on that buyback. You need to look at the full year picture.
Right. And speaking of the full year, what guidance did they give?
They gave guidance for Q2 and the full fiscal year 2026. For the full year, they're guiding total company revenue between $508 million and $538 million. And importantly, for the full year, they expect operating cash flow to be positive, around $35 million.
So, generating cash over the full year despite that Q1 usage.
That's the plan. That guidance suggests they expect the profitability and operational improvements to continue. For you listening, hitting that guidance, especially the cash flow number, will be a key proof point that the turnaround is sustainable.
It signals they've moved past just stopping the bleeding and are now focused on building momentum.
Precisely. It provides a baseline for measuring their performance through the rest of the year.
Okay, so let's try and tie this all together. We've unpacked the numbers, the divisions, the strategy. What's the main takeaway here?
Well, I think the deep dive really shows a BlackBerry that's, yes, back to profitability, which is significant, but more than that, it strategically positioned itself quite effectively.
In those specific niches.
Yeah, automotive software with QNX, secure communications for government and enterprise. They've got that big QNX backlog, giving visibility, key partnerships, driving wins. It feels like the execution is there now.
The strategy they've been talking about is actually translating into results.
It seems to be. Now, are there potential headwinds? Things to watch.
Yeah, anything we should keep an eye on.
You always have to. That DBNRR figure in secure communications, the 92%, needs to improve if they want strong organic growth from existing customers. They need to keep innovating there.
Right, keep proving value.
And for QNX, while the backlog is great, the auto industry is fiercely competitive and changing fast. Software-defined vehicles are the buzzword. They need to stay ahead technologically. Complacency isn't an option.
Constant innovation needed.
Absolutely. But connecting it all back, these Q1 results, they really paint a picture of a company successfully leveraging its deep roots in software and security. They've pivoted away from the consumer past and seem to be thriving, or at least stabilizing strongly, in these specialized enterprise markets.
It really is a compelling turnaround story, a case study in reinvention almost.
I think so.
Yeah.
Adapting that heritage to new, high-value problems.
So here's a final thought to leave you with. We've seen BlackBerry pull off this pretty dramatic pivot from phones to the specialized software and services role. It makes you wonder, what other maybe legacy companies we might have written off, could be quietly doing something similar?
That's a great question.
Undergoing these deep transformations under the radar, how would we even spot them before they braid out? Something to think about.